Hi, everybody. You can tell by what you're looking at right now on the screen that we're going to be talking to a top-notch elite technician. Christopher Inks is with us today. I've been talking to Chris for a few years. Welcome to TradeGate Hub, my friend. Appreciate you being here.
I appreciate you having me here, man. This is great.
So even though we know each other, first time we've done this live and be able to see each other.
Yeah.
So, I think the best way to kind of see into somebody is to know a little bit about their journey, Chris. And I know how passionate you are, and I've seen your work. I've seen great calls in the Dixie and other markets. Tell us a little bit about say the beginning of your journey, the embryonic part. What were you doing prior to getting involved in trading, and what was your first foray into it?
Let's see here. Prior to it, I was in high school. I was just, growing up, I lived an all right life. My parents were in the military. So, just kind of blue collar growing up as we were coming. So, everything I've got now is just, from things that I've learned over the years. But, when I was in high school, I said, man, I had this real issue with thinking that I'd have to actually answer to somebody who might not be making the best choices, the best decisions as far as the job went. So I said, okay, well, so what do I have to do? I have to either start a business and or get into trading. And so been doing both ever since. I've worked very few jobs along the way for very short periods of time, but yeah, most of it's been that just to drive, not to have to answer to somebody, I guess.
Yeah, we all are mavericks that get into this business, and we value things like our time, even though we spend more time than we would have on a 9-to-5 gig. Even though the markets, we may walk away from the market, we're always working, researching, preparing for what might be a curveball, trying to keep ourselves straight and the people that we work with straight. So, but we do have the independence of if we want to take a day off, we don't have to ask anybody.
That's right. That's right.
We want to travel. We could leave one bedroom in our house and go somewhere else, and we're in business. So, I want to start off with Bitcoin. Since you have it up here, we may as well start with it.
Yeah.
And I was looking at it, down around the lows at 15, 16 grand. And it was such a quiet, subtle bottom that seemed like it was just giving people forever the chance to buy it. Okay. And it must have been 2 months while we were moving sideways at the lows. And you got the weekly. So yeah, it was a few months, and we never really had that spike. All we did was have that last reversal and move sideways. I thought there'd be one more capitulation because I see like 2 drives there.
Yeah.
But a nice rally, and you believe this is the bottom of what's going to be a very big bull market in Bitcoin.
Yeah, I mean, obviously no guarantees, we've been traders for a long time, we know, but I think there's a lot going on in terms of what we actually had happen down here. To me, this period here, I've been talking about since this June drop over here, appears to be accumulation. And so, people go, oh, well, accumulation right here. Actually, I believe it started over here. I think this last push here was more of a terminal shakeout, just kind of get the last of the last.
And that was FTX, so it was news related, right?
Exactly. Okay. And you would arguably have thought it would have dropped further, considering that was like, we had all throughout the, the year there, we had Voyager, Celsius, all that. We had Three Arrows Capital. We had all the nonsense going on, all the breakdowns. But FTX arguably the biggest, and then we're finding out just how much of a potential fraud the whole thing was. And yet very small overall, but yet the volume's there, so that what it is people are buying, somebody's buying there, big guys are buying there. And so then we rallied up here, and I was telling people, I said, listen, we got this. I said, this doesn't look good, this weekly candle here. I said, one of two things will happen here. I said, if we get fall through the downside, then we're looking, down here, maybe 14, 10, 12, whatever.
Yeah.
I said, but if we break out above it, I said, we should expect a strong move up. That's a bullish signal. We're getting a really bullish signal that we'll get a strong move up into this swing high area up here. And, that's kind of what we got there. So for me, the way I approach it, I look at it real simply here. This is real simple way to look at it. If we're breaking through the pivot on the weekly pivot, we should rally into the R1 pivot area. Doing that should give us 5 overall waves up, which would give us a wave 1. We should get 3 waves back down to the pivot, which will be a 50% retracement of that entire move, around a 50% retracement. So if we were to break out impulsively above the pivot, overall, my thought is that we would get up here toward the R1 pivot. So you're talking about almost 40,000.
Yeah.
Pull back to the pivot. And that would be waves 1 and 2 off the low, off that November low. And then we just take on off. I mean, at that point, I have very little reason to think that we would actually go any further down, just based on my experience using pivots and Elliott wave together. The other thought here that I've been posting about is potentially that, this could be a 1 and we can get a 2, and then we'll get that breakout there. Now,
I like that. You know why? I mean, just my eyeball, and I enjoy interviewing because my interviews are a conversation where I'm not, I could add and my thoughts and see and bounce them off of you. So
yeah.
when I look at this chart right now, it looks like it wants to develop some type of head and shoulders bottom. And for it to have symmetry, it still means that there's a little bit more time. And if it has exact symmetry, the left shoulder is going to come in at that spike low around 16.5, 17,000. Is that a viable outcome short term to be a buyer down there?
Oh, I mean, I would definitely look to be buying in that area. And my thought is, again, we've got this inefficiency coming down, inefficiency going right back up. So, the thought being, if we're dropping into that, we're probably going to touch down to that area. And of course, you've got that high volume node there. And so I would, I'd want to see how this drops into it just to make sure it isn't like some move down. But yeah, I mean, for me, if we're dropping down lower, I'm really interested in the kind of like that 19,000, 19,1 area, which just so happens to be this high volume node.
Okay, yeah.
And then
so it's either 20 or
right
17 for the bull case here, right?
Say that again?
It's either 20,000, or at the worst 17. You wouldn't like to see it much below 17, would you?
Right. Yeah, exactly. Okay. I mean, if I'm getting down here again, there's a lot of volume. I mean, it's a big shelf here. There's a lot of volume there, but we're still pretty close to the swing low. So, I'd be cautious down there, but I'd definitely be looking for a reason to buy.
Okay.
Yeah.
All right. So there's your take. You have been one of the more accurate analysts that I've talked to over the last couple of years with regards to major turns in the dollar. I just want to give Chris credit that when Biden was elected and we were trading down at the 90 level, when most of the market was, oh gosh, we have a Democrat, that's the end of the dollar. He was turning bullish the dollar index around the 90 level. Okay. And then I had him on, I talked to Chris when we were up there around 114, 114.50, and he was declaring a top. And that was really one of the biggest breaks we've seen in a long time, and directional, in a hurry, impulsive. If there was ever an impulsive move, that seems to be it, that it could fall that dramatically, that quickly. I'm not an Elliottician, but is that impulsive?
Yeah, I mean,
first break.
Yeah, I mean, this is the kind of thing you look for, you want to see the market kind of jump into it, right? And be like, okay, yeah, we're definitely wanting to do this. And so, this move off the top here, let me just get rid of some of this other stuff.
That was a great call.
It's worked out well so far.
I want to, but now here's my caveat, buddy. So the last time I talked to you, we were trading around par and a half.
Yeah.
And you said, I really don't see anything that's going to generate much of a rally in the dollar that we're currently having. I asked for your line in the sand. I see the blue line there, 104. So as long as we're trading above 104, do we have an expectation of a larger correction? And back under 104, should I look at that as a continuation signal for new lows?
Yeah. So for me, if we're going to drop on, I would love to see an impulsive breakdown through that weekly pivot. If we can get that, that always feels better. You get a larger candle spread, you get a spike of volume. So you'd have to actually pull up the ICE futures there for the dollar, but, or the DXY there. But yeah, I mean, for me, we're still kind of, in this area. We did the break. We kind of pulled back to it. We came up, we're just kind of finding this same right here. So you've got this block right here that we're kind of running into. So I have to assume, this is a really crazy count when you start out, when you zoom in coming down. But I'm looking at this, if that's off the top there, let me get this put in here. Oh, actually, I've got it here. Yeah. So, I mean, if this is one off the top, which is the way I've kind of got my count now.
Okay.
This 38.2 is around, the wave 4 in here. I got to zoom into a smaller.
And that's a weak rally after a 1400 handle decline. The weaker the retracement, the more bearish I am after a big decline.
Yeah. I mean,
right. I mean, it can't. Okay, go ahead.
Yeah, no, exactly. And just as, working with Elliott wave, your wave 2, generally your initial target is the wave 4, the lesser degree. So wave 4 of 1 is generally going to be your wave 2 initial target area. Okay. So I always kind of look at that, and that was that big weekly. If we get back over to the weekly, it's that big wick here.
Yeah.
And so more or less it's containing. We've kind of popped up above it, but I mean, again, if we zoom in into the lower time frames now, we're breaking down pretty good off that rejection around the R2 pivot on the hourly.
Yeah.
So, I mean, but locally, right now, again, inefficiency here. So if we can lose this, I think we get a pretty quick, easy drop down below 104.66. But first target right here, you got to get below this. What is this here? 104.094.
Yeah, close enough.
Yeah.
104 is a pivot that's still in play. Right, Chris? I mean, you looked at something short-term, more of a trending correction, and yet here we go, confluence with 104 again.
Yeah.
When those numbers keep popping up, they give me a lot of conviction to pay attention to that level. And 104 seems to be the number there.
Yeah, I would agree completely.
Okay. All right. So why don't we move on to the S&Ps, because you kind of had a shift of opinion about 6 months ago. And, we had that 39.20 test last week, which is a trend line that everyone's looking at from the highs at the top, and tested it at 39. Are you still as constructive after this last break we've had and this pullback to 39?
So this gets interesting here. So if I look at it coming off the top, it looks like we've got a leading diagonal, 5 waves down, overlapping there. We've got 3 waves up, and then we've got 1, 2, 3, 4, 5. Okay. So we've got potentially a 1, 2, 1, 2. So this August swing high here, I've been talking about this for months. This is kind of like the area that I'm looking at. We have, if we jump over to the Dow real quick here, where's my Dow? There we go. You can see that the Dow already cleared that back here in November 28th.
Okay.
So, when you're looking at, indexes following each other, so now I'm looking for the NASDAQ and the S&P to kind of do its break above that as well to kind of confirm that.
Interesting.
Because breaking out, if this is, if this is 5 waves down, 3 waves up, and 5 more waves down, that's corrective. It's 3 waves. And when you break out above it, that locks that in as corrective. Now, with that, there's a whole bunch of different things that could happen, right? So if this is wave 3 and this is wave 4, then you could have a triangle print here. Wouldn't that drive the market crazy if it just kind of went sideways for the rest of the year, building this?
But everyone's embracing that. I'm glad you brought it up, because that's now the accepted narrative. Everyone will say now. They didn't say that a month ago.
Right.
People were looking for directional moves, a breakout, a melt up, or a crash. And now the narrative is it's a range, which makes me think we're going to get breakouts. I don't know which way. But now that people are complacent that, all we have to do is trade this range between, 38 and 42, and we're okay, that it's going to break those collars. Probably both of them, one first and then the other one later. Do you feel that way? Do you really think we're going to be range bound, that with everything that's going on, that we're not either going to resolve it by taking out the October low, or that we continue on and we take out last year's high?
Yeah, again, I'm really leaning toward getting a new all-time high. So, me coming in for the last few years, I was talking about the idea that we were going to top out there, at some point here and get this big depression, right? Eventually because we're talking grand super cycle type thing. And the last time we were there was 1929. And so, I was looking for that, but we never got a blow off top here. And so the thing about super cycles, if you're talking an Elliott wave, it's this fifth wave of a fifth wave of a fifth wave of a fifth wave kind of thing. So you've got all this exuberance.
Parabolic ascent, and you wouldn't call the COVID low to the high that we had at the end of 2021 a melt up. That wasn't enough to be a melt up. It's just a count, right?
I mean, anything can happen. I always say, I always preface this, but as traders, we look at, okay, what do we normally expect to happen, right?
We live in the future, Chris. We live in the future. How do you like? We don't live in the present.
No, but so you look at it and you say, okay, well, this is such a significant event, right? So if this is going to be the super cycle top, I mean, it should be quite significant. It should be a, hey, let us know you're there kind of thing. Kind of like when you zoom back here, if we zoom back to the 1920s here, leading into the Great Depression. Let me get on down here. You see this big lead up into that blow off, and then it comes down for a few years, right? And then, of course, it's, a quarter of a century or so later before it finally breaks out to a new high, right?
Right.
So when you're coming up to those big kind of fifth wave, it's this idea that that there's just so much exuberance in the market, and the people just believe there's absolutely no way it can go down, and everybody and their grandmother is long, and that's when it hits, right? And so we didn't get that. We got kind of this rollover here. And so that's when I was,
let me push back. We had SPACs, okay? We had memes.
Yeah.
We had crypto. It was crypto summer, not winter. There were some signs that said that, there's some malinvestment going on that really got wiped out. I mean, do you hear anyone talk about SPACs anymore?
Right. Exactly.
Maybe shoes that the gangsters wore in the 20s, but you don't hear about people, oh, I'm buying a SPAC today.
Yeah.
They'll go, you'll get smack with a SPAC. So, all right. So, still leaning bullish. What would change your mind?
I am bullish right now toward a potential breakout there. It seems like the Dow is a bit clearer on the counts here. So we've got 5 up here, which means, we've got basically a 3-wave pullback right at support on the weekly. We're about to stoke RSI is about to, it's resetting into oversold down here. So, I mean, it seems like it's setting up to go out. So we'll see. For me, I guess I would get off the Dow. I would really watch, where is it here?
So the Dow's going to lead the way, and the Dow's the only one that so far took out that August high.
Yeah. So if we can't get a breakout here, if we can't get this to break out and follow through and confirm that breakout on the Dow, with the S&P or the NASDAQ, which is even a little bit farther off, then I'd be like, okay, yeah, maybe we're heading down further to do something. But for right now, I think we're kind of no man's land right in this area. It's all just sideways right here. You got this big candle and this big candle and this wick here. And so, there's a lot going in here between these two high volume nodes. So, yeah,
I wouldn't want to see it under 39, under Friday's low. I think that'd be kind of a negative signal to me. What I want to ask you about, a lot of people are confused. They can't come up with counts after the big smash in silver. It kind of destroyed some of their more constructive counts, and now they don't know what it is. Gold has a little different wave structure, I believe, than silver.
Are you looking?
You were bearish silver
here.
Yeah, you were bearish silver for years and right. And last time we talked, you said you like the metals. So, okay, here we are.
Yeah. So, again, like you said, I was looking for this idea that what really got me was this this big spike of volume. If we look ranging here, in this kind of area, we've got this big spike up here with this large spike of volume. So there's a ton of selling, large player selling going on up here.
What a stop hunt that was, buddy.
Oh man, that killed people right there.
That was a month ago on the employment report, which we're going to have tomorrow. So we peaked on an employment report. Maybe we're going to bottom on an employment report tomorrow.
It very well could be. I mean, if I look at this rally up here, if I look up off the bottom, it looks like ABC. So that'd be a 1, 2, ABC, 3, 4, ABC is 5. I mean, it looks like a leading diagonal up here. And then we
Okay.
get this 3-wave pullback around 61.8.
Yeah.
As far as the channel here goes, it hits the channel EQ right there, the equilibrium right there real well. You know, weekly Stoke RSI reset, RSI itself is at that support level. I mean, there's a lot going for it that could potentially see this thing rally on up. I think if we get this break here around that 23 area up here, around that weekly pivot, if we can do that impulsively, I think there's little reason to believe that we won't break out and make a new high.
Okay. All right. So would it change the structure if we went to say 1905, 78.6 back? It would take out that midpoint line. But I saw a chart that I don't think includes a 24-hour trading, and there's a huge gap that doesn't get filled until 1905.
Okay.
I'll shoot it over to you after the interview, but found that interesting. And gold silver ratio above 90 now.
Wow. I haven't looked at that lately.
Big
Above
move
90?
from 75. I was only looking for 85. So it continues. Why don't we go to one more confusing market that you could crystallize for us? So, Powell being hawkish and the market finally believing him, it was interesting. Equities got smashed, silver got smashed, the dollar rallied, but yields in the 10-year and further out on the curve, like I use TLT as a proxy for the bonds.
Yeah.
And they, after Powell's testimony, were higher. So the long end of the market performed, and you're looking at the formation I'm looking at. If you look to the left, we had an island bottom before that rally up to 110.
Yeah.
Island there, island at the first pullback. Look, no, that one
right here.
Look,
Yeah, right there.
Gap down, gapped up, gap down, gapped up. TLT it's starting to look like Hawaii with all the islands here. What are you thinking here, bro? If we hold these lows that we put in last week, almost looks like the bonds could end up, if they break out over 110, they measure 130 to me.
Yeah. I mean, if they're
130.
Yeah, I mean, if we kind of zoom out here, you're looking like up here. Yeah, I mean, there's not a whole lot. Let me kind of zoom out here a little bit more. Jump up to the weekly here. I mean, I think if we want to talk lines in the sand and stuff, I mean, for me, again, initially I want to see an impulsive breakout through that weekly pivot, but it's got to clear this cluster over here. So that's right around that 121 area.
Yeah.
But I think if we do that, I think that opens it up for potentially, a nice, strong, continuous move up there. But until then, I'm cautious. Again, we're getting this range right here, right below that weekly swing low there, right?
Right.
And so if we kind of, just kind of zoom out a bit here and see where we're looking, I mean, as you can see, that area where I'm looking at is also the place where the market is most interested in, going all the way back here to 2003.
Okay.
So that's a significant area. If we can get that, and especially if we can come back and test it as support successfully, I think that, the market's just like, they want to push it on up. And then, you're looking maybe 138, 140, but
Still
for right now,
proven
I'm a little
itself.
iffy.
Yeah. Okay. So we'll see. I mean, just a guess. I'm thinking that the only thing I could think of that would generate something was maybe we start off with the NFP tomorrow isn't gangbusters. Maybe rates come down in the market, the S&Ps start thinking about not inflation anymore, but we finally have a growth scare. And we go back to a traditional flight to quality in bonds if risk off happens. What do you think of that narrative?
Yeah, I think a lot rides on this month's numbers, the jobs numbers tomorrow there, and then at CPI next week. I mean, even though the Fed's preferred inflation gauge, is that PPI there at the end of the month, the media still blows up the CPI. So, last month we had the big surprises in both, or really in the jobs. But there's a lot of looking at that thinking, there's a lot of things going on that said maybe that's just kind of a seasonal thing, So we kind of want to see what's going on there. But, everybody's been talking about recession for, like, I don't know, every 4 or 6 months now. for the last year and a half, 2 years, it seems like. And we're still not getting it. And so for me, overall, what I'm looking at is those construction workers, right? So, these builders have been, it seems like they've just been hoarding their workers. They're scared that if they let them go, they're not gonna be able to get them back if housing kind of levels out. And what are we seeing the last 3 or 4 months now? We're seeing housing seems to have leveled out. This past week, we saw the first week in a while where we've actually had a rise in home values. And we actually saw the builders hire a bit more construction workers. And, for me, as long as that's happening, it's hard to really trade with the idea that a recession is right there, because, it's once the construction starts laying off and whatnot, and then that just kind of spills over. People stop,
Right.
with the houses, but even our housing supply is at the lowest level since 2002. We've got like 7.9 months, I think, of supply in there. People are not selling because they're scared to get out of the low loans that they've had already.
Right.
People don't want to buy or can't buy because the rates are high. So, I mean, I think there's a lot of moving parts in there. And so
here's a moving part for you to throw in your stew. Okay.
Say that again.
Here's another moving part.
Oh, another one.
Another one to throw in your stew. I was going over some charts with Mike Venezia, and we looked at Home Depot. And the chart is very ugly, Chris. So people are staying home, but now they're not spending on remodeling. Yeah. So maybe the consumer, since they're all staying in their homes, why aren't they spending money to fix them up by going to Home Depot and Lowe's?
Well, I know we were looking at, if we look at consumer credit, that seems to maybe potentially have peaked out, right? Except when you're looking at that, if you're looking at consumer credit, then the biggest driver to this potential
mortgages.
Top was the slowdown in house buying and large purchases. But yeah, I mean, we can't deny that the higher rates are going to have some effect on people, but people are still out there buying. They're still out there eating out, which is crazy. Which means people, either don't believe the Fed, or, they're going to have to get slapped really hard to kind of curb what they're doing, it seems like.
Yeah. Restaurant prices are unbelievable too, when you go to one. Anyway, Chris, best way for people to keep up with you?
Best way absolutely is Twitter, at TX West Capital, or my YouTube channel there, at Texas West Capital. You can look that up.
Okay.
You can see us at howtotradetowin.com.
You teach people how to trade, and also share actionable things to do in your community. I'm a big believer in communities, and I'm a big fan of yours, Christopher Inks.
I appreciate it, man.
All right, I really appreciate my trading warrior brother, you being here and sharing some views and letting me bounce some of my ideas off you. It helps me have more, I would say, resolve and more confidence in what I'm doing in the market when I talk to you.
For sure. Me too, man.
All right. So Christopher Inks, everybody, hope you enjoyed it. Follow him, and bullish on Bitcoin, looking for spots to buy, still bullish the market, looking for silver to possibly hold, and long-term bearish the dollar. It may have a little bit left, but bearish the dollar. And you know what, Chris? If we get a bear market in the dollar, you could buy the world. Because if you get the dollar right, you get everything right, don't you?
That's right.
So let's hope this bear market rally in the dollar ends soon, and we could light up the boards with risk and buy anything.
Be fun to trade.
All right, Christopher Inks, thanks, buddy. Appreciate you being with us today. Good luck, and may pips just flow on you and your people.
I appreciate it, Dale.
All right. Talk to you later.
Take care.
That's a wrap, everyone. I'll be with Mike in a little over an hour. Good hunting. And remember, I know Chris does this, don't just count your pips.